Okay, good afternoon, 12:38 p.m., January 4th, 2019. I'm going to do a super quick review of the US dollar index. We won't be able to get to silver and Bitcoin today. I'll do those on Monday. Next week, we're going to be covering most, if not all of them, on a daily basis at midday. Those middays will get long for the next 6 months, but I will split them up and send the videos to the appropriate subscribers every day when I do them, so you don't have to sit through, an hour or two every lunch hour. But that's what I'm going to be doing going forward into the next time cycle. And the other important point is that I'm going to, when I'm trading these, I'll be showing you the smaller time frames, right? Because your trade plan and entry and exits are smaller time frames based on the larger time frames. So you'll understand exactly how I trade them and why. But for now, for those that are following the dollar, I'm going to give you a quick update on the general structure so you have an idea going into next week what's happening. And it really is summarized on the daily chart. This is a funky looking chart, but let me tell you, it works really well. We've had this for about 3 years now, or just under, and it works. And you'd have to get into the reports to really understand what you're seeing on your screen right now, but I'm going to give you some of the highlights so you have basic guidance going into next week. This highlighted light blue line here is the 20 MA on the daily, and price has been failing at that 20 MA quite consistently here. It's been failing in a really important area because this is the mid-channel line right here. And you can see how it's sort of consolidated around the mid-channel line. And it failed at the mid-channel line when it hit it to the upside. The other really important thing is the trading box on here is not highlighted, but there's one here. So you see that blue line and that red line? That's the top of the trading box for the current range. You see the blue and the red line here, bottom of the trading box. Now, it failed out of it, came back up, tested the mid-quad area, the mid-channel line, failed. This is reminiscent or a very strong signal of a structure breaking down. Now, is it going to? I don't know. All I know is it's under pressure. It failed at the 20 MA, it failed at the mid-channel line, and it's failed its trading box. Now every line on here is support and resistance, except for these two white dotted lines that are just showing you the range of trade. If you go into the reports, it's really important to understand the wider structure. This orange line here is support. This yellow line is resistance. So where these dotted lines are showing you the trading range. We identified divergence up in here in smaller time frames, and that's when I began to signal that in the new year we were looking for the dollar to get soft, and it's really softened up since we started signaling that. This is your up channel support here, so it's getting really close to that test. So where that white arrow is, that's your up channel support. Where this white arrow is at the top, that's your resistance in the up channel, and it's not doing well. So if it loses that, and then this diagonal dotted gray line here, I won't even get into what that is. If it loses that, then your next test is going to be whether or not it holds this support, this orange line. So you'd have to get into the reports to completely understand it. But at this point, whenever we get close to that 20 MA, it's a short. Now, it's failed at the 20 MA, it's failed at this trend line here, and it's about to fail at this trend line and this resistance. If it fails in there, this is really going to become your short area, and not far above where it's trading right now. But it's hard to say. I would venture to guess that you see this purple line here. and I wouldn't even get into the details of what all of these are, but this purple resistance is possible. So, you know, call it 96.54 intraday. But I think you're going to see it plunge out of here. And this date here, January 28th, 96.65, I think you're going to see that either there or before, but it might come in right perfect in the time and dump out of there. And if it does do what I think it's going to do, and this, you know, this is always predicated on market action, right? So you just got to know how to trade it up or down or sideways. But if it does dump there, you should see some pretty violent action into here. So in the first part of February, late January, first part of February. And then if it loses this orange diagonal trend line, and it should lose it around February 11th. So if this scenario plays out, on January 28th, you'll be trading 95 city. On February 11th, you'll be trading 94.58. And then here, 92.48 on March 8th. Now, when we start going through this in great detail next week, I'll give you the upside and the sideways scenario. But that's your bearish scenario. And once you learn how to read these charts and know how these structures work, you'll be able to, you know, in a down scenario where it starts to sell off, you'll be able to target exactly where these time cycles sit and get your, you know, your exact days. And the dollar or the trading amount for the instrument doesn't always work, of course, because there's changes in the markets and geopolitical and those kind of things, but it does help to understand the structure that you're in for sure. So that's all I'm going to get into on the dollar. Well, I guess I'll just take a quick look at this chart here for you. So this is the weekly. We've been using it as a general guide, you know, whether or not we're going to see an up or down move. Right now, if I just looked at this chart and nothing else, all I would say is, you know what, it's still pivoting. But because we have the other chart on a lower time frame, it's giving us indications that you're going to see change here on the weekly. You can see how it's testing the 200 MA on the weekly. The support. And you can see how it came in just perfect into this time cycle here. So where those diagonal lines cross, that's a perfect hit. So right now it's pinching between the 200 MA and a downtrending trend line. And where it's trading in that quad, if the weekly holds true, and that's a larger structure, then somewhere mid to late summer, so early August, the weekly structure is pointing towards $90. So as it trades through, we'll have a better idea. Next week is going to be exciting. Next 6 months are going to be really exciting because I know that structure is back in play, and we got a pretty good feel of what's going on. And one other quick thing, the MACD on the weekly is a really good indicator. It's been really flat and elevated, and there's a very good possibility we're going to see a downturn here. But once it gets a real turn, you can see how predictable the run is. Now this down in here, we knew this was divergent. We'd signaled that to members the whole time, and sure enough, it ended up getting back into its structure. But that's what we think is going to happen. There's the dollar. I'll give you the other scenarios next week. Have a great weekend. It's 12:48, so I've got to shut down and be out of here by 1 o'clock, so that some construction workers can get right in and around my desk. And I will see you in Sunday Night Futures, and lots of reporting and lots of trade alerts next week. Have a great weekend.